and a pretty significant risk reward for the upside. And we do think Elon pulls another rabbit out of the hat and this stock heads to new highs sometime this year.
Wow, I'll be damned. He said to sell Apple and buy Tesla stock because Tesla is likely making new all-time highs this year. That's precisely my prediction as well. Now, here in this video, we're going to go over that clip. I am going to play the part about Apple and about Tesla because I think you probably want to hear both of them. I think it's very relevant to hear both of them. We're also going to look at what Dan Ives just specifically said about Tesla, how Tesla's growth could actually accelerate in 2024 as the rest of the competition's growth actually slows down. Tomorrow morning, we are also going to be getting very important economic data. Your non-farm payroll report will be coming out. I will share my estimates and how this could change our markets. Because let's be honest, the thing that matters most right now is how well or poorly the economy is doing. If the economy holds up because labor is doing well and holding up, we could be in for a larger market rally. Tesla stock could rally big based on tomorrow's data. To the contrary, if that data report is bad, the unemployment rate is bad, well, stocks are going to fall. So I think that's very relevant information, and I will share my expectations. Keep in mind, I am not a financial advisor. Do not base your assessments or predictions or judgments or investments based on what I say. I'm just sharing my opinions. So first up is going to be the data coming out tomorrow morning. Your non-farm payrolls are estimated at 170,000. I'll tell you right now, the higher the better. This is no longer 2022. Where a bad jobs report was really good for the markets. No, a bad jobs report will be bad news. A good jobs report will be good news. Because why? Inflation is in a much different place now than it was then. Do you know that 6-month annualized core PCE is under 2%? Did you know that? 6 months from now, if that trend continues, you're going to be under 2% inflation. That's going to allow the Fed to cut rates aggressively, regardless of a recession or not. So we've seen some big progress on inflation. That's the key here. Progress on inflation, strong economy. If those two things happen, then you are going to be in for what Dan Ives says here in this clip we're going to play, the start of a new bull market for the broad markets, not just Magnificent 7 stocks. To the contrary, if it looks like the economy is heading into a recession, well, Tesla stock's definitely not going to do well. Nothing will do well if we head into a recession, at least for a period of time. Now, the good news is we're not heading into this completely blind because today we did get the private payroll number. It's a private entity that does the data instead of the government. It's called the ADP employment change. The ADP employment change came in way higher than expectations at 164,000 net job ads. The expectation was 115,000. So this is a pretty good sign that tomorrow's non-farm payroll report is going to be good as well. Now, I actually think the estimate of 170,000 job ads makes a lot of sense, but would I be surprised to see this number over 190,000, 200,000 jobs, considering it was December, and there's typically a lot of seasonal hiring that happens in the beginning of December? Not really. And let me tell you, if we get a number higher than 170,000 job ads, stocks are going to do very well tomorrow. We will also get the unemployment rate. This is what's interesting. So the unemployment rate is currently at 3.7%. We're expecting 3.8 to 3.9%. Consensus says 3.8%. Forecast says 3.9%. So you have pretty high expectations that unemployment is going to rise. Could it? Of course. It probably comes in at 3.8%. But if it does not, and you get 200,000 job ads, that is going to be great news for stocks. Because this will effectively say, well, we're probably not heading into recession here in the near term. There is always that chance that the non-farms just come in really low, though. So although I'm not expecting it, that is a possibility. And then you would expect stocks to do very poorly tomorrow. Now, Tesla stock specifically could move big tomorrow and likely will move big tomorrow. That's because Tesla has been falling a lot recently, and a lot of this is for those recession fears, for really everything we've talked about here in this video, the up in the air question of where the economy is going to be. Well, that affects Tesla stock a lot because Tesla is seen as one, interest rate sensitive, economically sensitive, consumer sensitive, Elon sensitive, right? There's a lot of worries always around Tesla. And if we can take the economy out of that, if we can start to definitively say, like, we're far from a recession, that will allow Tesla stock to start performing much better. And let's be honest, Tesla in the 240s, that's like free money in my personal opinion. This non-farms data comes out at 8:30 in the morning, as well as the unemployment rate. Now, at 10 o'clock in the morning, this is Eastern Standard Time, by the way, you will be getting ISM Services PMI. Services, one of the last areas we still have inflation, services ex housing, as well as housing itself. Now, this PMI is basically a gauge of the service activity. So less activity, potentially less inflation. At least in theory, that's how it should work. Now, last month, the number was 52.7. For December, you're expecting 52.6. So that would be a little bit of a down move, but I don't think, unless we see some kind of crazy high or low number here, that it's really going to do anything to the markets at that point, right? The non-farms unemployment rate, that is what is going to dictate, how the markets trade. But let's say we get a really high non-farm payroll report and we get ISM services falling lower than expected. That would be my expectation, actually. I think ISM services are going to come in maybe 52.5, maybe as low as 52. And I think non-farms could come in 190,000 or more. That would be great news for our markets and just help the markets, rally even more. But I think even if this number is high, it's not going to outweigh a good jobs report. If this number is really low, it's not going to overweigh a bad jobs report. Now let's take a listen to what Wall Street is saying about Tesla, including Dan Ives and this other guy that is on the 3-stock lunch on CNBC.
Next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over/under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be
here.
Good to
see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others, and in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking, that's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your take on Apple this morning with Barclays revealing its downgrade over cooling iPhone demand. Do you agree with the assessment there? Your channel checks showing the same thing about the demand picture for iPhones?
I mean, the last 48 hours, it hasn't changed from what we've seen over the last month. I mean, look, and I get some of these calls from a valuation perspective, and many that have been naysayers over the last year. But if I look at iPhone 15, we have not seen number cuts from our checks in Asia, and that's important because I think it shows that this upgrade opportunity is actually manifesting for Apple. I actually think the mix is much more Pro, specifically Pro Max in China. I think what that ultimately means is that this is going to be an iPhone number that comes in above expectations. But the most important thing, and David's talked about a lot, services. I still think this is going to be teenager type of growth, not single digits. If that's true, and we believe it is based on our checks, I think this is ultimately a stock that could go 30, 40% higher this year.
Wow, right. Well, you get potentially even a higher multiple again as services becomes an even larger part of overall profit. Let's talk broader tech here. Again, our viewers see you often, so we know where you stood towards the end of last year. This is going to be a big AI moment, and it's going to create a bull market overall for how many companies in technology this year, Dan?
Well, yeah, and talk about it here is that our new AI checks, and me and you've talked on the program a lot about use cases. Use cases are exploding. I mean, the average enterprise right now that we're talking to is seeing 15 to 20 potential use cases within their companies. That's why right now we think it's going to be 8-10% of budgets. And I think that's the important thing. You look, it's not just the godfather of AI and NVIDIA and Jensen. It's not just what's happened in Redmond. I think you're going to see the spread across the board in software and chips, which is why we believe tech stocks will be up 25% this year. And we could have some ebbs and flows, but I believe it's get out the popcorn moment. The new tech bull market has begun.
iPhone demand falling, sending shares lower, yet Apple is still up 40% over the past year. Your trade, sir, on Apple down 4% today.
Sure. Tyler, thanks for having me. First of all, it's a privilege again to be with you. Apple is a sell in our book. It's not a very popular opinion, but about 2 months ago or so, we were on your show talking about where to sell and trim and allocate new capital, and Apple was one of those names that we were cutting. The stock is just not cheap at all. In fact, it's very overvalued in our books, selling 28 times forward earnings, and the estimate, if they hit it, it's only going to be about a 7% earnings growth. I think what's most concerning is they had considerably shrunk their float over the years with incredible share buybacks. So when you add that back in, the growth is even more lackluster. The other challenge is that they've levered up their balance sheet with a debt to equity now over 2 to 1. So we're just not fans here. The sell-off today, obviously on the heels of the downgrade is unfortunate, but any respite from here, if somebody has the name and is looking to lighten up, I'd be a seller of Apple here.
Wow. Okay, we've got all the big names today, Quint, so we'll go from Apple to Tesla. Those price cuts boosting its fourth quarter sales. They had 485,000 deliveries, bringing the total to just over 1.8 million last year. The stock fractionally lower. Would you be a buyer here?
I am. I would be. I continue to do so. And this is a little difficult to talk about right after I talked about valuation, because this stock is also not cheap, selling 70 times forward earnings. However, they have no debt. And I think that what's going to happen is at some point we see the Chinese economy turning around. And I believe that's going to be a big boost for Tesla and their sales. And that would translate into a pretty significant boost in EPS. I also bring viewers' attention to technicals, which we don't talk about very much, but the stock has been consolidating for the last 2 years and really looks ripe for a potential breakout here. So you could put your trading hat on and you could basically look at the recent lows of around 194 as a stop and a pretty significant risk reward for the upside. And we do think Elon pulls another rabbit out of the hat and this stock heads to new highs sometime this year.
So that is going to go ahead and do it for this video. Let me know what your expectations are for tomorrow with Tesla stock and the data that will be coming out. Hit the like button and subscribe to the channel if you made it to the end of this video. My name is Michael Tyler. If you guys want to come trade with us as well, get notified every time I make a new trade, a buy, sell, short, options, crypto, whatever it is at the time, you get notified. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.